Hey there, investors! Caterpillar, the construction equipment giant, just made a huge announcement. They're boosting their share buyback plan to a whopping $20 billion. That's not all, folks. They're also increasing their dividend. This is big news, and I'm here to break it down for you. Caterpillar's bold move is making waves in the financial world. It's a clear signal to investors. They believe in their company's future. But what does it all mean for you? Let's dig in. First up, let's talk buybacks. You might have heard this term thrown around in financial news, but what does it really mean for you as an investor or even as an employee of the company? Imagine a company baking a giant pie. That's Caterpillar. This pie represents the total value of the company divided into slices, which are the shares. A share buyback is like the company buying back slices of its own pie. Essentially, the company is using its own money to purchase its shares from the market. Why would they do that? Well, when there are fewer slices available, each slice becomes more valuable, right? This is basic supply and demand. Fewer shares mean each remaining share holds a larger portion of the company's value. That's what happens to a company's stock price when they buy back shares. The reduced supply of shares can lead to an increase in the stock price, benefiting shareholders. By reducing the number of shares available in the market, Caterpillar is boosting the value of the remaining shares. This can be a strategic move to enhance shareholder value. This is good news for investors because it could mean higher stock prices. Higher stock prices can translate to increased wealth for shareholders, making their investment more lucrative. But it's not just about the stock price. Buybacks can also signal that the company believes in its own future prospects. When a company buys back its shares, it shows confidence in its financial health and future growth. For employees, this can be a morale booster. Knowing that the company is investing in itself can create a sense of stability and optimism about the future. For individual investors, understanding buybacks can help you make more informed decisions about your investments. It's a sign that the company is looking to return value to its shareholders. So, the next time you hear about a company announcing a buyback, remember, it's not just a financial maneuver. It's a strategic move that can have a significant impact on the value of your investments. In summary, buybacks can be a powerful tool for companies to enhance shareholder value, signal confidence, and potentially boost stock prices. And for you, it means a more valuable investment. Now let's talk about that sweet dividend increase. Remember that delicious pie? A dividend is like the company sharing a piece of that pie with its shareholders. It's a way for investors to earn money simply by owning the stock. When a company increases its dividend, it's like giving you a bigger slice of the pie. Caterpillar's dividend hike means more cash in your pocket if you're a shareholder. Sweet deal, right? Let's say you own a lemonade stand. You're a natural entrepreneur. You started with just a few lemons and a lot of ambition. Over time, your lemonade stand has become the talk of the neighborhood. People love your lemonade, and you've built a loyal customer base. You've got 100 shares of your lemonade stand, and each share is worth $1. Now, imagine you buy back 20 shares. This means you're reducing the number of shares available in the market. You now have 80 shares, but the demand for your refreshing lemonade is through the roof. Customers are lining up, and your stand is busier than ever. With fewer shares available and the same high demand, the value of each share increases. Because there are fewer shares available, the value of each share goes up. This is basic supply and demand. When supply decreases and demand remains strong, prices tend to rise. The same principle applies to Caterpillar stock. By buying back shares, they're increasing the value of the remaining shares. This strategy can be a powerful tool for companies to enhance shareholder value. When a company buys back its own shares, it shows confidence in its future prospects and financial health. This can attract more investors, further driving up the stock price. So, just like your lemonade stand, companies can use share buybacks to boost their stock value and reward their shareholders. Section 5. Market Magic: How Buybacks and Dividends Impact Stock Prices. In the world of finance, buybacks and dividends are two powerful tools that companies use to reward their shareholders and signal their financial health. Buybacks and dividend increases can have a magical effect on a company's stock price. When a company decides to buy back its own shares, it reduces the number of shares available in the market. This reduction in supply can lead to an increase in the stock price, as there are fewer shares for investors to purchase. When a company announces a buyback, it signals confidence in its future. This confidence can stem from various factors such as strong financial performance, a robust business model, or promising growth prospects. Investors see this as a positive sign and often rush to buy shares, driving up the price. Investors see this as a positive sign and often rush to buy shares, driving up the price. The increased demand for the stock, coupled with the reduced supply, creates a favorable environment for the stock price to rise. Similarly, dividend increases are like sweet music to investors' ears. Dividends are a portion of a company's earnings distributed to shareholders, and an increase in dividends indicates that the company is doing well financially. They indicate that the company is profitable and generous with its earnings. This generosity can attract more investors, as they are drawn to the prospect of receiving regular income from their investments. This can attract more investors, further boosting the stock price. The combination of buybacks and dividend increases can create a powerful upward momentum for a company's stock, making it an attractive option for both current and potential investors. Understanding these mechanisms can help investors make more informed decisions and capitalize on market opportunities. Section 6. Caterpillar's confidence, a positive sign for investors. Caterpillar's decision to boost its buyback plan and increase its dividend is a strong vote of confidence in its own future. It suggests that the company expects continued growth and profitability. Of course, it's essential to remember that the market can be unpredictable. While these moves are generally seen as positive, it's crucial to consider other factors that could impact Caterpillar's stock price. Section 7. Beyond the headlines, the importance of staying informed. Investing in the stock market can be like navigating a jungle. It's crucial to stay informed and make educated decisions. Don't just follow the headlines. Do your research, understand the companies you're investing in, and consider your risk tolerance. Remember, knowledge is power when it comes to investing. Section 8. Your next move. Don't miss out. Caterpillar's big move is a reminder that staying informed about financial news is essential. Whether you're a seasoned investor or just starting out, keeping up with market trends can help you make smart decisions. So, what are you waiting for? Start exploring the exciting world of investing today.